ended up with was this classic double top pattern on the Bitcoin chart, right? So the idea is if money is getting removed from the system and it's going to cause the stock market to fall back to a lower level, then really that's going to spread to all assets. And I'm including real estate in that, crypto in that as well. And we've even seen crypto kind of lead the stock market down. Arguably, if you look at the highs on the stock market, the highs occurred later in the time frame versus the crypto high. So, and again, the correction in crypto has been much greater than what we've seen in the stock market at this point. Now, I think that has a lot to do with the fact that crypto is still viewed as a very risky asset, right? You know, you have from highs to lows, 80% drawdowns every cycle in cryptocurrency, 2013, 2017. So there is this fear that you're going to see that 80% drawdown. I'm in that camp that you probably at least get back to 20,000 over the next 6 to 12 months in Bitcoin. I'm not sure how much lower we'll go than that. But in the near term, as long as cryptocurrency is viewed as a risk asset, you know, equal to the technology stocks essentially, then it's going to be affected by these drawdowns and these panic periods like we're seeing.
So if Bitcoin were to be coming down to the $20,000 range, what does that mean for Ethereum? And is there value in looking at Ethereum charts when it comes to technical analysis?
Yes. So the short answer is yes. Technical analysis applies to every chart you have. You're absolutely right that Bitcoin tends to be a leader, right? It's the most widely known cryptocurrency, although Ethereum is quickly closing in, you could argue, but it's still, Bitcoin still is the leader. So just to quickly go over the Bitcoin chart here, and then we'll go to the Ethereum. But basically you can see that, and this is just this is how powerful charts are, right? So if you connected the high from April to the high here in early November, this line is perfectly parallel to these lows, which connect to this low. So I utilized this to actually go long Bitcoin down in this lower range because of that factor, knowing that you'd likely get a bounce. And then I called for a $46,000 high, which was a retrace to this trend line right here. And sure enough, Bitcoin hit right there, and now we've seen it come down. To make sure that this trend line holds. So you could technically be a buyer of Bitcoin here or a little bit lower, but you have to be in the point where if it breaks this line, that would be your stop essentially. That would be where you would say, okay, it's broken the channel. It now could go down potentially as low as 29,000, then 24,000, and then potentially 20,000. So this as a trader for me on a technical basis is the most important thing. If that holds, Bitcoin has a shot to kind of grind back up. If it breaks, you're going to see significant downside. It has this very defined trend line on the charts, and you can see how it's hit here and here and here and here, and you're just above it. So kind of in the same respect, Bitcoin had this line, it had the upper line too, but you could argue that this line is just as important as that Bitcoin lower level. You can be a buyer of Ethereum here or anywhere in this range, as long as this line doesn't break. If this line breaks, this is arguably a longer term trend, right? So you were always coming back to this trend line, no matter how high you went, seemingly it always comes back there. So as long as this holds, Ethereum could rally. I mean, we could see this back to 3,200. We could see it to 3,600. I mean, there's resistance points up here that are absolutely valid. But if it breaks, that's where you start to head much, much lower. First support would kind of be down here in this pivot area. Then you have more support here around 1,300 or so. Now, if Bitcoin does go to 20,000 or sub 20,000, I do worry that you could see Ethereum kind of reverse the entire bull run. And kind of my worst case scenario for Ethereum would be down to about 800. And again, no one wants to, especially investors, I know a lot of your viewers are in Ethereum. I want to be clear that my long-term case for Bitcoin is extremely bullish, right? And crypto as a whole. I think crypto is going to be huge in the next 5 or 10 years. You have a bull cycle, you have a bear cycle. Bitcoin's had many, and Ethereum's had many cycles before, or at least a couple major cycles. So don't look at it like, oh my goodness, I don't want it to go there. Look at it like a normal progression of a longer term bull market in these cryptocurrency markets. And the good thing is that Amazon was in that phase, and it was $110 stock then. It went to $6, and now it's trading at like $3,400 a share. So think about that in terms of if Bitcoin went down the same amount, it would be under 10,000, but now you'd be talking about 250 or 300 or 500,000 if it matches the same movement that Amazon has seen, right? I mean, think about $5 or $6 to 3,400, incredible percentage move, probably even close to $1 million, frankly. So my point is that, you know, you need a healthy washout. There's a lot of crap in crypto with so many coins out there, but a healthy washout allows investors to focus on the best of breed, which are Ethereum, Solana, Avalanche, Bitcoin. You know, these are the ones that probably will be around. I do two things. I look at the past Bitcoin cycles. So if we go back to Bitcoin here, let me see if I can bring that up. Bear with me here. But basically, if you look at the past cycles on Bitcoin and we go back to 2017, so December 2017, it looks like you bottomed out kind of right in late 2018. So it was about a year later, right? So we're just in the first 6 months of the decline on Bitcoin. And if you go back to past cycles, it should bottom out approximately around 12 months out, maybe 14, maybe 10, we don't know, but somewhere around there. But what investors have to be ready for is this kind of longer phase that it needs to go in before the next bull move. So, you know, if you're going to 2000, we'll just call it 2018 to start, we didn't really start the breakout until, you know, late 2020, about 3 years later. So I think you look to buy, hopefully sub 20,000, you know, basically a year out, give or take, and then just be ready for a lot of chop before a full 3 years out is when you should get your next bull cycle. The only other thing I'd like to mention is if it's like the .coms, it took quite a while for the .coms to fully wash out, about 2.5 years to bottom. So there could be a little bit of a comparison there. But I think either way, for me, my price target to really load up is 20,000 or sub. When that happens, I'm a huge buyer and I'll just sit with it and be, you know, I'll be enjoying life at that point. I'll just say, all right, leave it be. I'll put the right amount of my portfolio in it and I'll just let it do its thing.